Welcome to Wisdom Wise Daily Dose of Wisdom and Wellness. Welcome to our deep dive into a complex and often misunderstood topic: who controls the world economy? This question doesn't have a simple answer, but we can explore the key players and mechanisms that shape global financial systems. From powerful nations and international organizations to influential corporations and financial markets, we'll uncover the intricate web of control and influence. In this video, we will break down the roles of these entities, how they interact, and the impact they have on our daily lives. National governments. National governments are significant players in the world economy. They control monetary policy, fiscal policy, and regulation within their borders. For example, the United States, with its substantial GDP, influences global trade and finance through policies set by the Federal Reserve and Treasury Department. Similarly, the European Union, China, and other major economies have substantial impact on global economic trends through their governmental policies. These governments can affect global markets through decisions on interest rates, taxation, trade agreements, and sanctions. International organizations. International organizations like the International Monetary Fund, IMF, the World Bank, and the World Trade Organization, WTO, play critical roles in the global economy. The IMF provides financial assistance and advice to countries facing economic instability. The World Bank funds development projects to reduce poverty, and the WTO oversees global trade rules. These organizations help stabilize the world economy by promoting financial stability, economic cooperation, and trade liberalization, thus influencing economic policies and practices worldwide. Central banks. Central banks, such as the Federal Reserve in the United States, the European Central Bank, ECB, and the People's Bank of China, are pivotal in controlling national and, by extension, global economies. They manage national currencies, control inflation, and set interest rates. By buying and selling government bonds, central banks influence money supply and credit conditions, affecting economic growth and stability. Their policies can ripple through global markets, impacting everything from exchange rates to international investment flows. Major corporations. Major multinational corporations, MNCs, like Apple, Amazon, and ExxonMobil wield significant economic power. These corporations often have revenues exceeding the GDP of small countries. They influence global supply chains, create jobs, and drive innovation. Their decisions on where to locate factories, source materials, and invest capital can shape economies around the world. Additionally, their lobbying efforts can impact national policies and international trade agreements, further extending their influence over the world economy. Financial markets. Financial markets, including stock exchanges, bond markets, and foreign exchange markets, are critical components of the global economy. These markets facilitate the buying and selling of financial instruments, allowing companies to raise capital and governments to fund projects. Major financial centers like New York, London, and Tokyo act as hubs for global finance. The movement of capital in these markets can influence economic stability and growth, with market trends often reflecting investor sentiment and economic forecasts. Wealthy individuals and families. Wealthy individuals and families, such as those on the Forbes billionaire list, also exert substantial influence on the world economy. Through their investments, philanthropic activities, and business ventures, they shape economic trends and public policy. Figures like Warren Buffett, Jeff Bezos, and the Walton family of Walmart fame control vast sums of capital and can significantly impact industries and markets. Their decisions on where to invest or donate can drive innovation, support social causes, and influence economic policies. Shadow banking system. The shadow banking system, which includes entities like hedge funds, private equity firms, and investment banks, operates outside traditional banking regulations. These institutions play a significant role in providing credit and liquidity to the global economy. While they offer alternative financing options and can drive economic growth, their lack of regulation also poses risks. The 2008 financial crisis highlighted the potential dangers of the shadow banking system, as the collapse of Lehman Brothers and other institutions triggered a global economic downturn. Global trade networks. Global trade networks connect countries and economies through the exchange of goods and services. These networks are shaped by trade agreements, tariffs, and supply chains. Organizations like the WTO facilitate trade by setting rules and resolving disputes. Major trade routes, such as those facilitated by shipping giants and logistics companies, ensure the flow of products worldwide. Disruptions in these networks, such as trade wars or supply chain issues, can have significant economic repercussions. In conclusion, the control of the world economy is a complex interplay of various entities and factors. National governments, international organizations, central banks, major corporations, financial markets, wealthy individuals, the shadow banking system, and global trade networks all play crucial roles. Their interactions shape the economic landscape, influencing everything from monetary policy to global trade. Understanding these dynamics helps us grasp how economic power is distributed and exercised in the modern world. Thank you for joining us in this exploration, and stay tuned for more insights into the fascinating world of global economics. Stay informed with the latest insights and in-depth analysis on global events and their impact on the world. Subscribe to Wisdom Wise and never miss out on